So as the crypto market continues to sell off, we're going to jump through some charts, take a look at some fundamental analysis, and also some areas where we can look towards for potential recovery signals and kind of areas of the market that could perform well, even in a downtrend. So if you enjoy the content, make sure you subscribe to the channel and check out the pinned comment down below. Now, in this video, I also want to talk about the kind of sentiment right now. There's a lot of fear in the market. You can see there's a lot of panic selling going on, which of course is kind of warranted at this time because there's so much uncertainty around. It's not just the crypto market tanking. You're seeing the S&P 500, you're seeing the Nasdaq going down the pan pretty quickly. Netflix opened again a lot lower than it did on Friday, even after tanking like 25% on Friday. So clearly a lot of fear in the markets. You've got political uncertainty, potential war over in Russia/Ukraine, a lot of negative things. So I do think it's important to sometimes take a step away, take a breather, maybe turn off your Blockfolio account. You don't need those notifications telling you your portfolio is down once again, and just look at the bigger picture. Because if you are investing for the long run and you didn't really plan to be taking out profits now, and maybe you missed the boat to actually exit with some good profits, well, you want to have this longer term investors time horizon. A lot of people you may follow on Twitter are actually day-to-day traders, and they're probably going to outperform during this period. And you don't want to go and start copying other people's styles just because they're seeing potential areas in which you can make a little bit of money here and there. I think the best opportunity now for most is to continue DCAing into the market, getting those blue chips and just stacking them up for the long haul. So Bitcoin, this is the chart of doom, of course, has just been in a complete sell-off, unabated for months now. And if we just look at the previous level I set out here on Friday around this 36, 37K region, there was a bit of confluence there that we maybe would hold this area, but we were unable to. Saturday, we just tanked even lower after a pretty bad Friday night. And then it seems to be acting as a bit of resistance here. It was as low as around the bottom of 33,000 here. It's still at 33,400, so not great. I've marked this blue line here. This is the 26th of January, so this will be the FOMC meeting. This is where Jerome Powell will let us know what's going on next with the Fed. Are there going to be rate hikes immediately? Are we going to have maybe a little bit of a dovish posturing due to the fact the markets are sold off so quickly? This is going to be a key date in the diary, as I'm sure you are all aware of at this moment in time. Where else can we go to? Well, we have $28.6 thousand, which is seemingly going to be acting like a bit of a magnet from this position. So the breakdown from 40K at around here over the weekend, Friday, was a pretty significant one. We had a bit of macro bullish structure up to that point, but as soon as 40K broke and we've comprehensively closed below this now, it looks like we are going to go and fill out this space in this kind of big region from 30,000 up to the mid 60,000. It looks like we have this huge range that Bitcoin is going to be occupying for quite some time. So the price magnet down here, 28.6, is definitely still in play here. I wouldn't be surprised if we make it down here, but we are hoping for some form of at least a decent bounce, hopefully around Wednesday when Jerome comes out and maybe talks up the markets once again, because of course it can't be politically popular to have the markets absolutely tank on you, and they have midterm elections in the US this year. The RSI is massively oversold, not to say it can't go lower. It went to a read of 20.5 just over the weekend. And if we actually go back to May, the lowest read we have is around 23, 22. So we've actually put in a lower read than back in May. And if we go all the way back to March of 2020, all the way back here, and then we put in a read of around 15.57, so roughly a 16 score. So of course, we can push lower still, but it does seem we are massively oversold, and having not had any significant bounce up to this point, it does seem a little bit odd. But, you know, markets will do irrational things, and so you just got to take it on the chin at this point. But if there are significant bounces and you want to take some profits at that point, that is all well and good in my book. The S&P 500 also opened around an hour ago at 4,356, come all the way down to 4,282. It looks like the sell-off is continuing in the stock markets as well. So not really any good news here to really cover in terms of price action, which is of course the most important thing in any market. And similarly, we're seeing the Nasdaq selling off as well upon open. Crypto Fear and Greed Index went down to an 11 yesterday, and that was while the price was at 36K. So even lower again today. I expect the Fear and Greed Index to go lower once more. But I do have a little treat for you here. I actually laughed for quite some time looking at this. Bitcoin at 60K versus Bitcoin at 30K. Kathy Wood's there, and of course, Bricktop from the film Snatch. Absolutely hilarious film by this guy. It's just the memes you get on Twitter are absolutely hilarious. Makes everything a little bit brighter. So I thought I'd share that with you. But onwards and upwards, let's have a look at some of the fundamental positive pieces of news that have been coming out. They've been coming out thick and fast. There's a lot of positives out there. Of course, doesn't help with the price action right now, but nonetheless, these are important things to cover. So I put some very bullish pieces for the long-term growth of this industry. Short-term is noise, in my opinion. We need to have a forward-looking outlook here. So weekly crypto recap from Blockworks, Coinbase and MasterCard NFT partnership. So Coinbase partners with MasterCard for an NFT marketplace purchases. So this allows non-ETH holders, non-crypto natives to start buying NFTs utilizing MasterCard. So it saves you having to learn about how to open an Ethereum wallet and all that good stuff. On the one hand, this is good as it makes it easier for people to access NFTs. I think this is healthy for the NFT market overall. But on the flip side, we would like to see some of these non-crypto natives come and actually utilize the tech firsthand, get a feel for utilizing a MetaMask wallet, and thus get them onboarded into this ecosystem. But either way you look at it, this is positive for the NFT space overall. And clearly MasterCard are bullish on NFTs, or at least making money from the NFT market. Intel to build a Bitcoin mining chip. Again, positive news. Cash App integrates Lightning in the US. We're seeing a 100% backed Bitcoin mortgage become available from Milo here. 300 US banks to trade BTC. Microsoft, $70 billion acquisition of Activision here, and they are pursuing Metaverse. So Microsoft, arguably the biggest software developer in the world and most famous, are actually going into the Metaverse rabbit hole. They can see the future. They've just written a huge $70 billion check. This is unusual. This is not any small feat news. This is big stuff here. Instagram to integrate NFTs. Google created a blockchain division. Twitter rolling out NFT verification. Charles Schwab to open up to crypto. BlackRock files for a blockchain ETF. Hopefully they could be successful with that. And South Korea have a 5-year metaverse plan. And of course, South Korea is where Terra and Terraform Labs are from as well. So Jonathan Cheeseman from FTX tweeted this yesterday in response to Nick Timiranos. The next hawkish turn for the Fed. If inflation looks like it isn't declining fast enough, the central bank could raise rates at consecutive meetings. So a lot of these Wall Street guys have the kind of consensus opinion here that he's pointing out. Deafening Wall Street consensus that there is upside risk to the number of Fed hikes this year. Remind me the last time a Wall Street consensus Fed view was right. So these guys are all super hawkish now, suggesting rate hikes are going to come thick and fast. So I replied to Jonathan there, indeed, what are your thoughts on this week's meeting? Has the market thrown a big enough tantrum that we see some form of backpedaling? And John says this, I think Powell will sound similar to 2 weeks ago. I don't think he was ever going to be as hawkish as the markets expected. But this also means there is nothing to backpedal from. My best guess is gradual will be their main message. So a lot of people thinking about this Fed meeting, of course, and Jonathan there suggesting we're going to see these it's going to be a gradual rate rise, maybe not putting down any hard stances as to when the first rate will come in. I don't think we're going to get a 50 basis points rise in March that some are actually betting on right now. But my point here was the fact that we've seen such a big sell-off just from the posturing of the Fed with actually no real rate rise as of yet. I think we will get this kind of response that John is pointing out here, just this kind of posturing towards a gradual increase in rates and tapering later on towards the back end of 2022. Bit more macro here, Darius Dale, absolutely excellent follow. Just the key point from here. Watch price action post the FOMC meeting. This may be the best blueprint for what will happen for risk assets over the next 1 to 3 months. He did predict in a tweet as well that he was chatting to someone else, just saying that he thinks we will have a sell-off into the FOMC meeting and then a bit of a relief rally afterwards. So this is kind of the thing I'm hoping for as well. And Elio points out the Fiat Spiral here. So we are at this point here, fears of inflation, so they have to react here and start to show tightening. And of course, once that happens and you tighten, there's going to be no growth. So lack of growth equals fear of recession, and they're going to have to loosen once more. And then this loosening, quantitative easing, causes a bubble. You get the fear of missing out, people pouring this easy cash into the markets. Bubble occurs, then we have inflation once again, and we just repeat this circle of life. So it's pretty evident that fiat currencies are screwed. and that cryptocurrencies will, in the long term, be the safe haven assets and places where you want to be parking your money for the long term. Of course, it's not great in the short term when things are selling off and the dollar is actually growing in strength, but you can see the picture and how this is actually going to play out over the long run. So you want to position yourself for that eventuality, because the debasement of fiat currencies is not going to stop. The only way out of these things is going to be for them to once again start stimulating. Dan Tapiero, macro investor, talks about tightening cycles and Fed funds rate increases up to 300 basis points on average over these tightening cycles on screen here. But over that period, the S&P 500 went up 90% on average. Just a little bit of food for thought there. And then we have an unbelievable response here. So someone put, what is your expectations for the near to short term, and tagged Raoul Pal. I've no fucking clue. So as you can see, no one on a short-term time horizon has any idea where the market's going to go next. Else we would have all sold the top, be 100% in stables, and be able to buy these dips up like crazy, like many people on Twitter are suggesting they've done. Of course, we know they're probably lying, and most people are feeling pretty wrecked. We're all in the similar boat here. We want to see crypto markets go up, but unfortunately, in a free market, things can go up very quickly and down very quickly as well. So let's move on to this. So back in the summer, of course, we had that big sell off, and this is the Axi Infinity chart. And you can see that things were going up nicely for Axi Infinity. They were getting real network adoption and growth. Grew up to about $11 here from earlier in the year, starting at sub $1. So over a 12x here or more. And then we have, of course, the whole market capitulating at once. And then this is where you get those bargains on the outperformers, because Axi then went from around $3 all the way up to a peak price of around $160. So a huge return on investment for people to get involved at those lows. And similarly, what we're going to have again here is a big market-wide sell-off, and everything sells off. Nothing is able to withstand the force of the sell-off from the market overall. Everything just gets nuked together. But you can see from the ashes, you want to pick out those phoenixes. You want to find those platforms, those projects with huge user numbers, with network effects, and with big growth potential. And Axi was that from the summer of 2021. Could this potentially be one for this year? DeFi Kingdoms, the Jewel token. I need to look more deeply into this, but they do have a huge dominant say on the Harmony One blockchain and a huge number of users on there. And this is absolutely slidden off the side of a cliff here, and it's just going down only right now. But if in a similar fashion, this has huge user numbers, it's getting network adoption and growth, well, then there's no reason that this won't turn around. And this could be a potential area in the market, crypto gaming, that kind of stuff, where you can see the earliest reversals. And of course, you want to come out of the other side of this at the soonest point. You don't want to have a laggard sector that takes ages, needs Bitcoin to go and break new all-time highs for it to start trending up again. You want to get on these new trend setters. So I'll definitely be monitoring the likes of Jewel, DeFi Kingdoms, Axie Infinity, and a load of play-to-earn games, because these can be counter-cyclical overall if the user numbers are there. Another tweet that stuck out here, so this was from Gainsey. Another Twitter account, Nomad, tweeted this. Something like, if there's a gold rush, I want to be selling the shovels. In my opinion, the next NFT bull cycle will be massive, and I want a piece of every NFT platform, specifically music NFTs and gaming NFTs. And down here we have Elio says, sounds super. Super Farm Marketplace will be coming out very soon. We keep hearing this time and time again, but there's a lot of posturing towards an imminent release for that. Of course, market conditions aren't good right now, but if we have the true Web3 style, stake your super tokens and get a share of the profits from the marketplace, similar to what we've seen with LuxRare here, well, there's less incentive for you to dump the token. If you're getting paid to hold it, it's a whole different dynamic from just holding a cryptocurrency, hoping the number go up so you can sell it at a later date. If you're getting these kind of revenue shares, you're getting regular dividends out of holding, then you're incentivized to hold for the long run. What's the point in selling something if it's actually paying you? So as we've seen, OpenSea has done more volume in January already than it has in any other previous month, which is an insane statistic, even with competitors like LuxRare out there right now and doing pretty well itself. And you can see the LuxRare token went from a peak of around $7 down to around $3.40 as of right now. A bit of a stark correction, but this could be again one of those cryptocurrencies that may be worth getting your hands on at some point. I don't know whether it's a good idea to start layering in heavier now than later. Personally, I just DCA no matter what. I've got a budget set aside each and every month that I can put into my blue chips, the ones that I really like. And for me, I'm just adding to my Luna stacks continuously on a month-by-month basis with fresh fiat currency. I'm not really going to change that up anytime soon. And of course, all these decisions need to be done on a personal basis. But if you can see something you think might be a future blue chip, maybe you think this will be a future blue chip, well, maybe it's not a bad time to start thinking about DCAing in on a monthly basis while the price is going down, especially when you can stake it and get a revenue share component. Over the weekend, UFC heavyweight champ Francis Ngannou took half of his paycheck in BTC. Talk about going mainstream with Bitcoin. UFC has been a real proponent of cryptocurrency with so many sponsorships, and this is definitely a good thing. You're going to see a lot of sports fans knowing about crypto. So he took on Bitcoin as his paycheck, 50% in total. And also the UFC have been big on NFTs. And you can see the NFT industry is going to go absolutely huge. Wearing my champion tier knockout moment from UFC Strike NFT. So they've got a new NFT brand here from Dapper Labs on the Flow blockchain, UFC Strike. I think this comes out this week where you can actually own the NFTs of special UFC moments. I think these will be super, super valuable. This is like the original baseball cards in the US. We now have UFC, one of the biggest growing sports in the world, with their first batch of NFTs. I think this is pretty dope. And also you can see that they've started to embed the NFT items within jewelry as well. So pretty damn flashy, pretty cool stuff. NFTs will go mainstream this year for sure. It's already happening, but I think the growth we're going to see in this sector could be phenomenal. And so positioning yourself maybe in the likes of Super Farm, Looks Rare, those picks and shovels of this industry, if it can grow and really outgrow the crypto space as well, which it certainly seems to me like it could do, well, then you could be onto some serious winners. So even when prices are down, it's always worth casting your net out there, having a look, continuing to research, look at things, and establish where you want to position your funds next. So that is exactly what I will continue to be doing here. Still will be producing regular content. I'm not going anywhere. You're going to see a lot of potential up-only YouTubers, the Moon Boys, quit. You won't see them coming back due to the fact the market is now highly bearish. And so this is a good opportunity for us who do stick around to find the next gems. Tomorrow we're going to cover Solid Swap from Andre and Danny, and we'll dive into that one. So if that's interesting to you, make sure you're subscribed and check back in tomorrow for this video on Solidly. But that's all for today, folks. I hope you're doing well out there. Any questions or comments, hit me up down below. It'll be good to chat, and I'll catch you in the next one. Goodbye.